Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello traders, checking in on the broader market, and today I was wrong. So this is important to address and talk about, because if you want to be a trader long term, or if you want to be even an investor and do it over a couple decades, you better get used to being wrong. And that requires some recognition of your ego and some shedding of that ego. So I was right on the direction to be looking to start the week, but a little bit too early, starting to look bearish. Again, yesterday I said I wanted to see a gap up open and to be looking bearish. We saw the bulls open near the highs of yesterday on a lot of individual names. I was scouting bearish. So what I did was I attempted one bearish entry on Facebook. I saw that the bears had no follow through. I exited half of my position right around break even to lower my risk. And then I stopped out on the other half for a small loss. And at that point on, I knew sit on your hands, because the last thing you want to do is have a thesis and have a bias. That's fine to have a bias, but you cannot be attached to it. And that's where your ego comes into play. If you're of the mindset of, I'm right, this is going to play out, and you can't accept the fact that you might be wrong, that's when you end up in very big red positions. So it's the kind of thing where as soon as I got stopped out, I said, okay, I'm wrong, at least initially on the morning. And the last thing I want to do is enter Facebook short and then look for a short on the S&P 500 and then look for a short on Netflix. And next thing I know, I've racked up 3 losing trades in a row. What we must do, and what I do whenever I have a losing trade, is I just stop and I pump the brakes, because the last thing I want to do is get into momentum on the losing side of things. And again, it's the analogy of calling a timeout in basketball. When the other team scores 8 points in a row and is just rolling with it, you call a timeout, you break that flow. And in ping pong, I do that as well. You know, if it's ping pong and I've given up 4 points in a row, I take a step back and do a little lap around the table and break the flow of the opposing player. So, and that's the other thing, you know, when you have people like myself or other traders and you look at one trade and then you can tell it's always a newer trader that's going to, you know, make a comment and troll you about being wrong. It's like, man, I've been wrong 100 times this year, and it's no biggie. You just have to recognize being wrong and not stay wrong. That's not my quote. Someone else made that quote. It's okay to be wrong. It's not okay to stay wrong. So the S&P 500, we are looking at our key resistance here. And for SPX 500 USD, we're looking at 3167.70. So high, low, lower high, very clear. 2-day high or low has been set. And as we know, bigger picture, the burden of proof is absolutely on the bears. We're going to assume that this is going to break bullish, because that's the way that the prevailing trend is favoring, unless the bears can prove to us some significant weakness. So I am still watching for weakness, whether it's tomorrow or Monday, keeping in mind Friday we don't have trading, still watching for at least an initial rejection from these resistances. If we were going to just head right through and break these resistances, in my opinion, we would have to see notable bull volume more than average. Otherwise, tightening range is the most likely scenario into next week. So SPY didn't have a huge day. It was the tech sector that had the huge day, because the financial sector was weak. So it was pretty much financial sector weak, healthcare and tech sector holding on just fine. And I've been talking about how our lead tech bulls will have to lose daily uptrends and break lows of Monday if we're going to see any bear break on this S&P 500 chart. And you look at Amazon, blue sky breakout. You look at Apple, not there, but just under blue sky breakout. Microsoft, blue sky breakout. Netflix, blue sky breakout. And that was a big, impressive one. I would normally be looking for a daily lower high compared to 474. Have to see volume for the most likely scenario to not play out. And certainly the bulls brought the volume today. So tech sector, QQQ hit all-time highs. So tech sector is the reason for the extra strength today. I should say the continued strength. IWM is weaker. So IWM, red day today. Why was it red? Because IWM has more exposure to the financial sector than the S&P 500 does. High, low, lower high, higher low. Is this our lower high being set? If the low of today breaks tomorrow, we'll be pretty comfortable saying that's our lower high, and we'll be focused back down on the low of 136.29 support. QQQ. So new all-time high. We never lost the daily uptrend. At this point, the bulls are keeping full control. All-time highs, incredibly impressive. There was a higher low there, another higher low, another higher high. And again, next time we pull back, look how much space we have now. So even if we start red the next couple days, we would have to see the tech sector pull back over 5% to lose the daily support level that was just established. So bulls have space to work with, even if we do have to consolidate from here. Healthcare sector, key resistance is approaching 101.34. If that level breaks, it is a bull break of the 2-day tightening range. And if you have QQQ breaking bull and you have XLV breaking bull, yes, the financial sector will hold back the S&P 500 a bit. But if 2 out of our 3 and our two most important, if they are going to break bull, then that increases the odds that the S&P 500 is going to break bull as well. Bears have to see XLV reject from resistance tomorrow and tighten up a bit. So here's the financial sector with its weakness, and it's dragging down all of our laggard sectors. Cruises, airliners had a big strong start to the day, but the financial sector weakness dragged them down. Our private prisons are correlated to this. Even some other names like GE and Ford, they are very correlated to pretty much the exact chart that the financial sector is seeing. So continue to watch that correlation. Let's check in on these private prisons, watching for a lower high on GEO, CXW, bear flag on the daily possible. So again, very weak. And the financial sector is a potential daily bear flag. If the low of today breaks tomorrow, the odds of a potential daily bear flag will increase, and 2252 is the key support level from here. We have not seen 2 green days in a row, or at least 2 convincing green days in a row since the top of the COVID bounce. Look at how many times we're closing near the low of the day as opposed to closing near the high of the day. We've got maybe 3 days near the high of the day. 1, 2, 3, 4, 5, 6, 7, 8 days near the low. And if we see another leg down, that's obviously going to have some weight on the S&P 500, but it won't be enough unless the tech sector sees weakness. Biotech sector, also a bit of weakness today. Well, shaped up better than I thought. So higher low at 108.43, and now we're just focused back on the all-time high of 115.77. We would have to fail to break that level and break 108.43 to confirm a daily downtrend. And we can say, very simply, if 108.43 continues to hold, the bulls keep complete control on the daily time frame. So many individual names have a line in the sand support level established now from the low of Monday. SMH. So some profit taking today, unable to break resistance. So we're still in this tightening range. High, low, lower high, higher low. Maybe a lower high if the inside bar breaks bearish tomorrow after a weak close. We will stay in this tightening range. So failing a bull break for now in the semiconductors. Volatility index continues to drop down to lower lows. Again, still watching for a weekly higher low compared to 2350, but no sign of a daily trend change. And we could say next time we bounce on the daily, we'll just be watching for a lower high compared to 3710. Gold. So gold with a potential indecision candlestick, but we have to see follow through from the bears. So big drop today. Have to see a 4-hour lower high and lower low in order to confirm that 4-hour downtrend and see daily consolidation begin. And again, the reason I don't have FOMO in gold right now is because since this double top bull break, here we stand up 1.4%. If we were up 10%, sure, I'll feel some FOMO. Darn, I missed that opportunity. But 1.4%, who cares? Bulls still have control, but it's not an impressive, flashy breakout at the moment. Silver. So silver did get a bull break of 18.39, the top of the entire move, but obviously profit taking on the day. So if we break the low of today tomorrow by confirming a 4-hour downtrend next time we bounce with a lower high and lower low, we zoom out and look for the daily higher low key support 17.37. So bull break with no follow through, have to be cautious of that being a double top, but it's only a major red flag if we lose the daily uptrend after that rejection. Miners pulling back today. Nice bounce into the end of the day. S&P 500 strength is helping these miners. So big drop. Held the low of yesterday. Solid bounce into the end of the day. In the end, it's a daily inside bar for GDX here. If it breaks bearish, we look for a daily higher low compared to 34.08. But otherwise, that's the second highest close we've seen in the bull miners in a month. So that is still keeping them in control. Oil inventory report, a little bit of a bearish reaction. So again, it's just I'm not an aggressive bear, but I'm not a confident bull. It's getting feels a little bit toppy. 4-hour time frame, still an uptrend. We would have to see a break of 39.05 and 38.85 supports. If we get those, then a daily lower high is set compared to 41.63, and we then focus back on our most important daily support of 37.08. So natural gas pulling back today, which means our August futures contract and UNG are rejecting from daily resistance. So the hope for the bulls now, need to see UNG change the hourly trend back in favor of the bulls to set a daily higher low compared to 8.89. And then we have to see the bull break of 10.38 and 10.47 for a convincing trend change. And again, we're watching the Nat Gas USD weekly exponential resistance, which continues to come into play. Have to see that trend change to the bulls on the daily. Setup's there. If I didn't know any better, if you cover up who this is and you just show me the setup, I would say, yeah, I'm probably, I want to know what the weekly chart's doing, but I'm probably interested in trying for a daily higher low. But you tell me it's natural gas, no chance. Not interested in that Widowmaker bear. One of these days, natural gas will likely see a very significant bull move up, but I'm not going to sit here trying to time that bottom. So that is where we stand overall. Impressive day for the bulls, led by the tech sector. S&P 500 has some key daily resistance approaching. If we reject, we will be looking for tightening ranges to head into next week. And it's possible we stay within those tightening ranges until mid next week. Tomorrow will give us some telling information. And tech sector bulls keeping full control. It's definitely a tale of different sectors where stay-at-home names, a lot of them are blue sky breakout right now. And we've got our tech sector names extremely strong, but we've got our airliners and our cruise liners and our financial sector and our hotels. They're all still weak. So clearly some further division. I mean, you just look at QQQ and XLF, and there are periods where they go down together, but every time QQQ takes one step back, XLF is taking multiple steps back and is certainly not taking the same amount of steps forward either. It's going to be a very interesting next 3 or 4 trading days. Hope you had a good day. Have a good long weekend, and we'll see you next week. These are purple bush beans, so they'll be like string beans. And there's some white ones. These will be regular. Or actually, I think these are yellow. Scarlet runner beans. They have some long vines, so I built a extension to this trellis. Got the white cloth so the birds don't fly into it. And I'll probably have to do that for the cucumbers as well. They'll get tall enough that I'll just extend up the fence there. These are the watermelons starting to run wild. I'm just going to let them go on the paths here. Normally you'd need to be worried about the soil making the fruits rot out, but this mulch should act as a good guard against that. So these are garden huckleberries, and they'll be a perennial that keeps coming back here. So I'll have to cook those into pies and stuff when I get enough. Squirrels climbed up and broke this sunflower, but it still has all these side shoots that'll make little sunflowers.